Good morning. It's March 23rd, 2023. Yesterday we had Powell Day and then Yellen afternoon. Let's make sense of all of it today, this morning. Powell definitely walked the tightrope yesterday, in my opinion. Even with the 25 basis point hike, he gave softer guidance and basically kept the median dot for year-end stable at a target range between 5 and 5.25%. But he really kept the door open that they could lift rates beyond current projections, depending on what's going on with inflation and obviously concerns around the banking sector. But really, whether the Fed hikes another 25 or 50 basis points or will pause, I don't really think is the area to focus on right now. The Fed's prior hiking has a lag. That's what we really need to focus on. How much is that going to tighten credit and dampen growth in the economy, as well as the ongoing QT. Remember, they're pulling money, they're sucking it out of the system. And we know it happens in the opposite with QE. That's when assets were rallying. So we're going to have a pressure on growth and pressure on the markets. Plus, it takes labor a really long time to soften, and inflation is still high. And I know I don't really want to throw fuel on this foreseeable fire here, but small banks account for 38% of total U.S. commercial bank loans and leases. And we're talking about 67% of commercial real estate, 38% of residential real estate, 28% of consumer, and 28% of commercial industrial loans and leases. And small banks account for 22% of total U.S. commercial bank holdings of Treasury and agency MBS, so mortgage-backed securities. That's really important. So what do you do with all that? Especially if you're not in the investment industry and wrapping this up every single day? Equity valuations, therefore, are really too elevated, with corporate profit forecasts most likely going to get cut by analysts during the upcoming reporting season. I know that they were cut over the last 6 months, but we have new challenges, we have new tightness, we have new credit issues that are going to affect everybody: corporates, consumers, investors. So let's hop over to the Longbow dashboard, which is more day-to-day in nature, not intermediate or long-term in nature, but keep these long-term items into play here when you're thinking about the technicals. So let's switch over. So what do we have today? We've got, yesterday I warned you that tech was overbought and the protection, remember the PSQ, was oversold. So obviously yesterday, after Yellen was speaking, everything was tanking. Today, people are a little bit less concerned. Everything's rallying. So you obviously would have had to trade that day to day, but you can see what happens. Now the SPY, we're here in a neutral zone. It's between the green and the red ends of the trading ranges from the short-term technicals. SH, which is the inverse ETF for the SPY, same thing in the middle. Qs near the top end of the range. My guess, you might see that push it over if this keeps rallying here today. And then the same thing here, PSQ isn't at the total bottom end of the range, because yesterday, remember, this was oversold, but then we had the big move down. So that's why the set ranges here, they change because it's updated every 30 minutes. So now it's in the middle of the range. The dollar is oversold, so it means that it's below the low end of the trading range. So if you think the dollar is going to get stronger, obviously you would buy into it, but we'd caution here that the short term, it's bearish. So it's been depreciating, and medium term, it's neutral. We actually think over the intermediate term, we're going to see the US dollar depreciate. So this isn't the day that we would be playing anything. Obviously, we want to be seeing this at the top end of the range when people are doing a flight to safety. Gold in the middle of the range, SHY, which is short-term treasuries, in the middle of the range. TLT obviously had a nice move after the comments yesterday by the Fed and with Yellen, and so now it's still in the middle of the range. So not too much to do here unless you've been shorting dollars. In that case, you might decide to trim or pause here if you were thinking of adding to the position. That's what we've got day to day, but don't forget the big picture. So the big picture we were talking about before: growth pressured, credit crunch, be careful, too high equity valuations. That's it for today, and we'll see you back tomorrow.